Welcome to Stony Finance Lab channel.
Welcome to Stony Finance Lab YouTube channel. My name is Yongchen. Our topic today is consumer debt, auto loans, payday loans, 401k loans, and HELOC. The first type of loan is auto loan. This loan allows people to pay off their vehicles, boats, or even aircrafts over time. In this video, we'll cover some of the main concepts that differentiate the loans a typical car buyer may come across. Auto loans can either be secure or unsecured. For secure auto loans, if the borrower fails to pay back, the lender can take the vehicle and sell it to recoup the lender's losses. For unsecured auto loans, there is no collateral for security, meaning lenders cannot take away any assets if payments are missed. One advantage of secured auto loans is lower loan costs, but as a consequence of it, borrowers might be subjected to strict requirements. One advantage of unsecured auto loan is that borrowers are free to spend the money. There's no restriction on how they use the money. The con is high finance costs. Direct auto financing is when a borrower obtains a loan by interacting directly with the lenders. Borrowers can see the APR report and other loan details firsthand. This eliminates the possibility of third party using the APR. However, it's quite time consuming because borrowers have to file different applications by themselves. Indirect auto financing is when a third party acts as a middleman between borrower and lender, such as a dealership. These third parties are usually more professional, but they can raise their APR. Defaulting on auto loans have many consequences, including damage to credit score and risk of losing assets. Even after a car is being repossessed by the lenders, the lender can still send the remaining debt to collection companies, and they may chase after the borrowers. Next, let's talk about payday loans. It is a type of short-term borrowing where lenders will charge high interest credit based on how much the borrower earns. The principal is typically a portion of the borrower's next paycheck. They are also called cash advance loans or check advance loans. Payday loans are usually lent by small credit merchants or online lenders. They charge very high interest and do not require any collaterals, meaning your assets will not be taken away even if you fail to make repayment. Interest rates are fixed because these loans are expected to be paid back in one lump sum payment. Different states have their own rules in maximum loan amount, loan terms, and finance charges. One quick fact about payday loans is that about 12 million Americans use payday loans each year. Most don't have bank account or credit products. The third type of loan we are going to talk about is an equity line of credit, oftentimes being referred to as HELOC. This type of loan allows homeowners to take out money on the available equity of the home value. To qualify for HELOC, the house mortgage amount must be less than the value of the house. It is best for people that need access to funds over a period of years. It is commonly used for home improvement, medical expenses, large purchases, and college tuition. Interest rates vary based on the homeowner's credit scores. Some disadvantage of HELOC includes fluctuating interest rate. Borrowers may be subjected to paying additional fees like annual or cancellation fees. Like most other debts, late payments damage credit scores and failure to repay will put the house at risk. Some advantage of HELOC include low or no closing costs. The interest rate tend to be lower than credit cards, lower upfront costs than home equity loans, and interest only occur for the amount borrowers use. Lastly, let's talk about 401k loans. If your employer provides a 401k retirement savings plan, it may choose to allow the employee to borrow against their accounts. Borrowers can typically borrow 10,000 or 50% of their account balance. The borrowing limit is no more than $50,000. It's best for those that need cash for a short-term interest rate. Interest is low and repayment periods are generally up to 5 years. However, borrowers must be required to pay the loan back in full before leaving a job. One disadvantage of 401k loan is that once a borrower fails to pay back, tax consequences might follow. Some advantages of 401k loan are speedy, convenience, and flexible repayments. There is no additional fee for 401k loan. In this video, we talk about 4 different types of loans and their characteristics, and auto loans good for consider if you are planning to buy a car. A payday loan is a quick way to get cash using your pay stub. 401k is a low-interest loan that allows you to borrow against your personal retirement savings accounts. HELOC is a type of loan that acts like a credit card for homeowners. Thank you for watching the video.
Thank you for watching this video. Please feel free to like, comment, and subscribe to this YouTube channel.